A lot of bad news about Vietnam, less attractive, get worse, leads to higher prices in real estate. In Vietnam, that number is not true. The developers develop faster than the demand. In a nutshell, lower than those other economies. 82% loss in profits. Plans meets reality is not doing so well. Really becoming a ghost town, increasing their losses. The Chinese tourists are not coming into Vietnam. Others with legal troubles bleed money. So all of these problems together. My personal opinion is Vietnam has opened up since May 2022, but the flow of tourists still have not come in yet. The resorts are still empty, but yet Vietnam is still building resorts and hotels. The question is why? So in today's episode, we're going to talk about the twists and turns that have rocked the real estate, tourism, and the investment scene. From bustling cities to the serene beaches. This is what you would expect of Vietnam, but that's not exactly what's happening. But why? It's a fascinating story of billions of dollars, resorts, foreign direct investment, and a little bit of drama. So let's get into it. Hello, my name is Ken Duong, international business immigration lawyer with over 15 years of experience helping foreign companies and individuals invest into Vietnam in the real estate industry, tourism, technology, and many other areas. And I myself am an investor as well. So I'm going to share with you today about the tourism industry and how to invest and avoid some of the issues. So let's start by talking about Vietnam's real estate overview. So 9 months of this year of 2023, Vietnam attracted $1.94 billion of foreign direct investment. That is 10% of the FDI into Vietnam. However, it's not as rosy as you think, and the picture might be less attractive. We are still seeing foreign direct investment increasing of a 7.7% year on year into Vietnam, totaling about $20.21 billion of investment. The number one category is into manufacturing and processing, and yet number two is still into real estate. Nevertheless, it has dropped 45%. But wait, there's a twist in the tail. Revenues are not going into the resorts. But why? Despite the downward trend, investors are still pouring billions of dollars into building and buying up resorts. To understand why foreign investors are still investing large amounts of money in Vietnam, Vietnam is on a mission to develop infrastructure, including roads, ports, and airports as well. So we made a very specific video about why and how to invest into factories in Vietnam. So click on the right hand corner to watch that video where we talk specifics on the amount of roads, the amount of airports and seaports in order to build infrastructure in Vietnam. And as you know, infrastructure leads to higher prices in real estate. This, combined with attractive investment policies, has made Vietnam an attractive place for foreign dollars. Now, before the world went haywire, then the pandemic impacted Vietnam. Vietnam was the destination for traveling, from being a hidden gem for avid or seasoned travelers to a new destination to explore for families. The developers developed faster than the demand. What was the result? It caused overdevelopment of many of the resorts and properties, thus making many unfinished properties or finished but low quality. But there are still very high quality and great projects as well, and that is something to look forward to explore in Vietnam. So looking at tourism in Ho Chi Minh City, it's actually rebounded back to the pre-2019 levels. But unlike Ho Chi Minh City, cities like Da Nang or Nha Trang, beach cities, have not rebounded so well because their operating costs are actually 40 to 60% higher than in Bali or in Phuket, which are other competing destinations for similar beach cities in Southeast Asia. Looking at other Southeast Asian economies as well, they are getting back to their old levels of revenues per available room with about 4%. In Vietnam, that number is not true. They're actually much lower for their average daily rates or revenue ADR, which is 33.4% lower than those other economies. Hopefully, with the opening of Japan, Korean, and Chinese markets to Vietnam, these numbers will start to pick up in Ho Chi Minh City as well. So, how are the big players in Vietnam doing? In a nutshell, it's complicated. Let's take a look at Alma Resort, which has investments from some really big players such as Warburg Pincus and also Vina Capital. However, in 2022, they exhibited a loss of $34 million, and in 2021, they exhibited a loss of $28 million. So they're increasing their losses. Alma Resort is a special model in Vietnam. It is a timeshare where you can buy the property and lease it back, and in a timeshare system, and people can live in luxury apartments and villas, and the owner will actually get revenues as well. Nevertheless, there are oversupply of these particular type of resorts, thus Alma is not doing so well. Large groups such as the Flamingo Holding Group and also the Ninh Vang Bay Tourism Real Estate Company have exhibited 82% loss in profits in the first half of 2023, and their debts continue to skyrocket. Other groups such as Crystal Bay and Euro Window of Nha Trang have also exhibited large losses similar to those other companies. It will continue to bleed money as long as the real estate industry and the tourism industry cannot pick up to bring in enough tourists. So it's really becoming a ghost town scenario for many of the resorts in Phu Quoc and also Sapa and many of these other destinations that normally attract a lot of visitors. They're even giving very deep discounts in the room rates, but yet these places are still largely vacant. So overbuilding meets a global crisis, and the results are not what you really want. But the bigger irony is there's still the demand falls and the incomes decrease, but yet there's still an oversupply of resorts. Many remain empty, other with legal troubles, and even illegal construction, similar to the video that we did about Phu Quoc, and many of the illegal construction and the buildings have been taken down. Adding to the already challenging situation, the Chinese tourists are not coming into Vietnam, which is a large part of the pie of tourism, and also war in Europe as well, decreasing in the amount of European, especially Russian travelers to Vietnam. Because of the limited supply of flights, the cost of the flights have been increasing as well. So all of these problems together are creating it very challenging for the Vietnam tourism industry. Just looking at Vietnam's close neighbors, which are the different Asian countries, they have dropped by 32% of the amount of tourists, especially South Koreans, which is a large part of the Asian travelers. They have not even hit the levels of pre-19 pandemic. So based on the information we provided regarding the tourism challenges, my personal opinion is the difficulties will stem from many of the resorts being overbuilt, but also there's been a lot of bad news about Vietnam generally, from the real estate crisis to many real estate tycoons going to prison, and also the banks not lending. So it's a slew of bad news that has been generally surrounding Vietnam that causes others to not be able to come in. Also, I would say that immigration policies, as we do many of these inbound immigration for people to come here, it's actually much more difficult, and they haven't gone back to pre-2019 policies, which allows 1 year multiple entry into Vietnam. So compounding all those things, the tourism industry is tough for this quarter, what we call Q4, but I see that it's going to actually get much better in Q1 and Q2 of next year, where people are coming in. At Yung Global, we're seeing a lot of them saying, hey, we're coming into Vietnam, we want to meet with you, we want to meet with your company and see what is going on. So I see the momentum picking up, especially for the business travelers coming into Vietnam. So hopefully Q2 of next year, the economy will start to pick up, consumers locally will spend, and also foreigners will travel to Vietnam. Well, the moral of the story, Vietnam's real estate market, especially resorts, have highs and lows, but it's a great study on supply, demand, and of course external shocks, the pandemic. It is a great example of where tech meets terrain, dollars meets dreams, and plans meets reality. So what are your thoughts about this video? Will the tourism industry get back on track, or will it get worse? So comment below what you think will happen. And as always, thank you very much for watching this video. My name is Ken Duong, On behalf of Yung Global, make sure you like our Facebook page, subscribe to our YouTube channel, comment below about the tourism industry, and of course, click on the bell for notifications. So thank you for watching, and I'll see you in the next one.